Hello, this is Jared, and today we're going to be lending some knowledge of what's going on in the mortgage marketplace. Kind of an interesting week. The week started off kind of in anticipation of the Fed meeting minutes, and everyone thought that they'd probably dial it back a little bit. So the rates started going up beginning of the week, and then they kind of came down throughout the week after he gave his speech, which is like 11:30 on Wednesday. He was more dovish, saying they're still voting to keep the rates unchanged at this point. But the dot plan they showed, most people still think 3 rate decreases this year, which is really good. The downside is they said, the really big news is they're going to taper their balance sheet. What that means is they're going to start putting off some of their assets that they have and selling them into the marketplace, which that will kind of script the supply and demand and probably not help interest rates. So, it's kind of, they're trying to really slow it down a little bit and not come to a really a quick up or quick down in interest rates, which is probably better, but who wouldn't want to see lower interest rates? Unemployment rates rise. They could cut rates a little sooner. Existing home sales rose, which is great to see. And then kind of the trend of that is they're still kind of up compared to like the beginning of February. They are headed the right direction the last 2.5, 3 days. So I'm hoping that kind of continues. And then, historically, they're still kind of at their, they're kind of their peaks, right? So the purchase power is the same as last week, even though it probably spiked, it's higher than that at the beginning of the week, and then it kind of came back down to it. That's down a little bit over last month, and it's the same as what it was a year ago. So what that means for buying power is you have the same week over week, but about $6,000 more from what it was last month. And then buy downs probably still make sense. A lot of people are getting down in the mid sixes by paying buy down or points. Probably makes sense. The break-even point's like 2.5, 3 years. I think that's a reasonable timeline. And if we go back in time, we're going to go back to 86. So this is before I was in the business, but 1986, we got These Dreams by Heart. Rates were 10.01%. So as always, if you have any questions over the weekend, you can always reach out. We're happy to help. Thank you very much for listening. We'll talk soon.